Everyone says diversify, diversify, diversify. What if that advice is actually holding you back from building real wealth? If you want your money to grow faster, not just protect it, watch this. When I started investing, one of the first stocks I bought was Palantir. I was reading, doing research about Palantir, reading about its earnings and how it had become a major play in the government sector. And next was its commercial sector. It had a sticky business. I bought that stock around $20 and it went down to $10, then to $6. And I bought even more. I bought it even more because I had the conviction that there was nothing wrong with the company. The company's fundamentals were even stronger. Result you can see. It turned around. I sold it around 45. Another example, let's take AMD. I started buying AMD around a year back when it was 130. It fell to 110, it fell to $80. But I was convinced that this is going to be a major play. Only had a mere $200 billion market cap. And based on the current projections that came in, it's going to grow more than 30%. Do you think this was possible if I had invested in S&P index, diversified my money in around 20 stocks and achieved 2x or 3x returns within a matter of a couple of years? S&P index doubled its returns over 5 years. These stocks, some of these even tripled within a couple of years' time. I'm not the only one, and I'm no one in comparison to great Warren Buffett. He believes the same way. Let me show you a clip which proves what I just said.
Look at how the fortunes were built in this country. Uh, they weren't built out of a portfolio of 50 companies. They were built by someone who identified with a wonderful business. Coca-Cola is a great example. A lot of fortunes have been built on that.
You can see Buffett's concentration in Apple over time. It was at its peak around $174 billion. That is around 50% in end of 2023. That is not diversification, that is concentration. Similarly, you can see the numbers. He's concentrated in Coca-Cola. He had high conviction, and his returns speaks volumes. If you don't have the time to research, hours to spend on financials, reading through financial reports, going through the 10K, 10Q, leadership, what the growth is like, what the projections are like, what the current PE ratio is, what the future PE ratio will be. If you don't have time to research on these, you probably should diversify because you will be not confident in your research, the stock will fall down, and you might panic and sell. That is why quite a lot of people put in their money in indexes to get a consistent return without having to research or spend much of the time. But that doesn't build real wealth. Buying businesses, being owner of the businesses, doing your research, going through reports, financials, earnings calls, 10K risks, competitor analysis, and how their management is ingesting all that content. And based on the projection, investing in a right stock builds real wealth, as it did for Warren Buffett. And you have to know the area of confidence. For me, my area of confidence is tech. I was a software engineer. I did my understanding in computer science. That's my background. Play to your strengths. Focus on what you actually understand. Let the conventional advice dilute your potential gains. If you like this content, please like the video, smash the like button. It would really help if you would hit the subscribe button. It gives me more motivation to come up with content. My goal is even if it helps even if it helps one person achieve higher returns or helps bring someone closer to financial freedom, I'm happy. Thank you so much for watching.